Great. So let's go ahead and get started. Well, one day is Thursday, April 4th, 2024, and this is the week in charts. Obviously, I want to thank all you guys and gals for attending tonight. Looks like the numbers are okay here. Getting a few people showing up. That's good. So thank you for taking time out of your busy schedule. I know how crazy it can be. So we're going to talk about, well, obviously current market conditions. I have a lot to say about that, especially with today's action. And I'm not too concerned, and I'll show you why in a few minutes. In fact, I think it's good, although painful for the market, to have a little bit of a knockout move every now and then, or a pullback, whatever you want to call it. Your favorite stock and crypto picks, your questions on trading, just punch in your tickers one at a time. If you don't mind, that's for your benefit, so I can see which ones I covered and didn't. When we get to the live charts, we'll start with crypto. We'll go to crypto first, and then we'll go to stocks afterwards. I wake up thinking about a lot of different things. Like a friend of mine once said, we had a party for my wife's, I think it was a 2-year-old at the time, and we were dating at that time, and we were playing musical chairs with the 2-year-olds or whatever. The 2-year-olds were playing musical chairs, however old she was. And my buddy says, Dave, your parties have changed. So, Dave, what you wake up thinking about has changed. Oh, wow, I can actually see now. Anyway, I woke up thinking about becoming and being a trend-following moron. And I never really told the whole story, so I'm going to give a Reader's Digest of how I became a trend-following moron and what it means to be a trend-following moron. And that was a very painful yet pivotal part of my career. And we'll get to that in just one second. I want to continue along the theme that trading is trading, and we're trading traders, not markets. And crypto is a wonderful market to show these things, and stocks too, obviously. But stocks sometimes take a little time for things to develop, and then crypto, bam, it happens overnight. It happens during a day. It happens intraday. It happens in a few minutes. It's crazy. I saw a meme a while back talked about, was that horrible movie Interstellar? I like Matthew McConaughey, but that was a horrible movie. And it's like one day here is like 7 years on Earth, and they made a comparison to crypto. You know, one day here is like 7 years trading, whatever. And an hour watching that movie is like 7 hours of your life going by. Anyway, it's not about the crypto. Trading is trading. I want to talk about the methodology and action, and we have 2 new mystery charts this week. And that'll make sense in just one second. Q&A, feel free to start punching your questions in right now. I'm monitoring GoToWebinar Live, and I will be checking in on live stream too. Oh, it looks like the live stream is working. Thank you, Bruce. I appreciate that comment there. If you do want to attend live, we're doing both simulcast at the same time, GoToWebinar and YouTube, and we've had some challenges, but we're working through it. But anyway, you can go to YouTube at Dave Landry to attend, or if you want to go to where the source is, you can go to davelandry.com/webinar. And if you register for one, you register for all with the davelandry.com/webinar. And there's my other information. This disclaimer screen, as you know, you can lose money trading, or as often sum it up, all predictions are about the future. A lot of stuff can happen between now and then. That's from Greg Morris. All right, let's talk about crypto. And again, you're trading traders, not markets. And markets are markets, okay? And if you think about a market, what is a market? Well, the market is the people behind the market that's trading the market. So you need to figure out what they're doing or what they would likely do based on the patterns, and the patterns, technical analysis, but it doesn't have to be that technical, as you'll see in a few minutes. In fact, the simpler, the better, and that's why I'm a trend following moron. But the players in crypto are a little bit more fickle than the other guys, and they're a little bit more excited, and they rush in and they rush out, but that's okay. As long as you're following the charts, you'll do just fine. And I'm not betting the farm on this, and some people are like, I can't believe you putting all that money in crypto. No, it's really not that much. As you'll see, some of these trades are less than $500 a trade I'm putting in. And I've been resisted up in my size. I did parlay a small account a while back, and I found that when it got big, the equity swings started to get pretty tough to manage. But right now, I'm just trading a small account. I have 3 brokerages, Coinbase, Kraken, and a very small account of Gemini, which I may eventually shut down. But anyway, before that digress too far, because I'm going to get asked that, I realize that. So here was a trade in this render token. You know what they do? I have no idea. And you should not confuse the issue with facts. We'll get to that in just one second. Now, in this particular case, I will show you a few mistakes that I made. And I was trying to figure out why I did this. And as I was going live, I think the reason I did it, usually I'm just putting like $1,000 total into the trade. I mean, like some of the margin I use on trades might be in the six figures on some trades when you're trading stocks, a $70 stock and whatever, that's 1,000 shares, $70,000, or even the Q position that I'm in right now is 40 something $1,000 just for 100 shares. So it gets kind of crazy. But in crypto, you really don't need a lot of money to get started. And I'm just kind of having fun with it and seeing what I can do and seeing where I can go with it. Also, I was thinking about this recently, or as I was going live, I should say, and I kind of treat my crypto account like an ATM because it's so easy to transfer over to checking. So if we need money for something, I'll just transfer a little bit of money over. And I'm not bragging. It's just I'm not making a mint, but I'm making a little money in the crypto. Anyway, in stocks, as you know, I analyze the volatility of the market, and that gives me my stop, and my entry is above the market to avoid getting triggered in a noise alone. And we add all that up, and in adding all that up, we come to a number, whatever that might be. In the service, it might be 15%, it might be 30%, but it varies based on the volatility. Now in crypto, because they're so volatile lately, actually since I've been doing this, I just use 20% because it's really easy to just use that nice round number. So when I get in, I'm looking to take off half at 20%. Now in this particular case here, instead of putting 1,000 in, ended with 1466. And I think the reason is, this was what I meant to say earlier, is that I went to put in a limit order for half the shares at 20% and I fat fingered something, and it turned around and it bought more of this token. And by the time I did all that, it was already profitable. So I said, well, the heck with it. Let's just see what happens. I know you can't get a little pregnant, and as Linda Rasky says, you should correct all mistakes immediately, but it's $466. It's not going to kill me. Let's just see what happens. So I let it play out. So I did take off half at 20%. And as you can see, this thing had a pretty good run, 59%, and then it came down fairly hard. And for some reason, and here's another thing, here's another mistake, I don't know why, but for some reason I bailed on it right here. Now, I don't know whether I needed money for another position or what, and you're probably thinking, well, Dave, check your trading journal. Well, I don't really take detailed notes in crypto because there's so much else going on, and I'm so busy with stocks and everything else. And I'm keeping really detailed notes there. That's my bread and butter. That's my core methodology, and that's what I do. That's how I roll. And I want to be able to see what I'm doing, especially when things go awry. How did I screw up, and what can I learn from that? Whereas the crypto, I'm in and out of these so quickly sometimes, I just don't sit around and write about it, although I should. So do as I say, not as I do. So I was stopped out on the remainder, and that put 240 back into the account. So we add all that up, and it comes to $378 or 25 cents, 25%, I should say. So this one worked out pretty good. And there you see the money management. And in this particular case, it was a little bit of a pullback, and I'll show you a more obvious pullback in a minute. But this was pretty much a pullback. You could see kind of a TKO type of pullback, but it was also a bit of a breakout. And that's why I got in right here. By the time I saw this, I'm like, oh, that's a TKO. That looks fantastic. It's also a Landry-like pullback. By the way, I'm working with someone from Korea, and I don't think he speaks English, unfortunately. So if he's watching tonight, he probably can't follow along, especially with how fast I talk. But he was asking about TKOs, and a TKO can be within a pullback. So you can see this market begin pulling back, and then you have a TKO. Now, some of my favorite TKOs would be like right after market hits a brand new high, especially like a day like this one where it closes well, and the following day the market just gets absolutely whacked. So that would be a one bar pullback, and that's the only one bar pullback pattern I trade. Well, with the exception of something like a bow tie or a first thrust, all you need is a one bar pullback. But as far as a generic pullback, usually it's several bars, but with the TKO, it can't just be one. I made the mistake of eating some ham before I went live and only have a little water, so we'll see what happens, see how that goes, see if the tongue gets stuck to the roof of my mouth. So anyway, that one worked out okay, and I'm now out of it. Now, here's another one, and by the way, these are from the last show, which was 2 weeks ago. So people are like, well, how long do you hold this crazy crypto? I'll hold it as long as it moves in my favor. I think we had one a few weeks back. We just stopped out of, or we being me, that we started in November. Anyway, so there's the trades on this one. And by the way, you see this little $25 here? What I do is I'll put in an order at a double to take off $25 because sometimes they'll spike up, and I have a few examples of this, I think. Sometimes they'll spike up and come right back in. And what I'm doing just for S&Gs is when it makes that spike up to 100% from where I got in, I take $25 off, okay, and I put that into Bitcoin. Now, that makes me a bit of an investor. I get that. And I'm not going to worry about it until it becomes substantial. Maybe once I get to 1 Bitcoin, or if I get to 1 Bitcoin, then I'll start playing some money management and some market timing, things like that. But for now, I'm just kind of doing a mining experiment. Now, I did it before where I left it in a native currency, like this FET, whatever this is. I just leave 25 bucks or 50 bucks in FET. Well, I know I put in thousands of dollars over a year or so doing that. And then when I cleaned out the account and moved it over to Coinbase, I only had like $600 left in those coins. So that kind of failed miserably. I think what I was hoping, and this goes a little bit against the grain, I realize that, but I was kind of hoping, it shows you what happens when you hope, right? But I believe I was hoping that one of these would take off and become quote unquote the next Bitcoin. So that was kind of a silly thing to do. And the reason I did it, as I've said before, is, of course, me being the nerd that I am. You wouldn't believe what a nerd I am, some of the things I'm doing. I found an old tree in the woods behind my house that's laid out. I'll be cutting it up and drying it out. I'm going to make a table out of it. I mean, that's what a nerd I am, just a nerd. But one of the nerd things, I looked into mining crypto, and I realized that in this day and age, you really can't make any money mining. As I said quite a bit, you could buy like a used miner, or you maybe even a new one, an older model new one for 200 bucks, and you plug it in, and it'll lose about 10 bucks a day. So my mining, so to speak, is taking little pieces off of these shit coins, SHYT coins, and putting it into Bitcoins. And that's actually added up to a few $1,000s. And I'll show you, especially if I get to 1 Bitcoin doing this, how that's working. But anyway, so you can see once again, and this was a small position. The reason I didn't go $1,000 was because I probably only had $666 left. As of, it was Sunday, now things again change quick. 1 year is like 7 years, right? Or 1 day is like 7 days. 1 year, 1 day is like 7 years. But anyway, as of Sunday, I had 10 out of 10 IPTs that were hit, and I was free rolling with 10 positions. And we'll look at the live portfolio in just a second. And I think I'm down to maybe 4 or 5. But anyway, at this point in time, all I had was 666 left, 667 left. So I put the remainder of the account into it, 20% IPT. So 398 comes off. And then at 100%, I mined, so to speak, $25. So I put in a limit order, and the order should pop up in here somewhere, and to take off $25 at 100%. And I'm still in this one. Notice it just kind of came down and consolidated and hit the moving average, but it didn't trade below it. Not that the moving average is a magical thing that you should always stop out right at the moving average, but it can help you to judge whether or not you should be long a market. I did a Your Daily 5 yesterday. It's on my website, davelandry.com, and you could also find it on YouTube, where I talked about how the 30 EMA, and I've done this presentation before, but the 30 EMA, especially with Landry, can be your best friend in all markets. And I would encourage you to do that. So let's add all that up. 667 in, 398 at the IPT, 676 mark to market. That's the position's value. So this is how much came off. This is actually just the profit. It's only $64, better than poke in the eye. We add all that up. It comes to $432 at a 667 invested. Okay, so that's a 64% return. Now remember, I am trading these things. I long lost friend. I was talking to him on Good Friday. We were hanging out together. We were pulling a tree out of the woods, and or a log, I guess, 100-foot log. And he's like, yeah, I bought this one and that one. And he named Solana and all 2 years ago, and they all went down about 50%. And now it looks like they're coming back. It's like, if only he knew somebody who traded he could ask him, but I guess he doesn't. I digress. So here's another one, and this one I think was, yes, I've been long this for a long, long time. You can see this was a breakout, by the way, when they're running, okay? When they're all going up, or most of them are going up, all you do is just buy the strongest ones and hold on, okay? And take profits at the IPT, and if you get stopped out, you get stopped out. But again, $1,000 in, 20% IPT, so that's $596. Probably some commissions in there. Why? Reason why it's not 1,200 divided by 2. So $1,000 in, IPT would be $1,200. Okay, when it hits the IPT, you should have $1,200 in your account. Half comes off. It looks like there must be a commission that's coming out of there. So only $596 came out. And then this one ran 65% before pulling back, and then I stopped out of it, and there was $589 left on the stop. So we add all that up, and it comes to $185. It's better than the poke in the eye. And if you annualize that, it's not too bad. Now, one thing that I like to do with crypto also, if they're not, especially if they're not running, and I'm going to flesh this out in just 1 second, so just hang in there for a minute. But if most of them are running, I'm just buying the ones again that are going straight up. But I also use a core methodology. So you can see this one is new, or at least new to Coinbase. It kind of meandered and went sideways for a while. I don't know if I played it back here. I should go back and look, or if I even had it on my radar. But I know once it pulled back, this kind of looks like a hot IPO pullback, which is something that I like to trade. So I went in and bought it right here as it began to rally, begun to rally out of the pullback. So there you go. Nice thrust higher followed by a pullback. Just simple TFM stuff, right? So there's all the trades right there. And this was kind of interesting. Once I had a double, because I got in at 50 cents, round numbers, okay? 60 cents is your IPT, that's 20%. Once I had a double, I said, you know what? I'm going to put in an order, like I said earlier, at a double to take off $25, okay? And here's the deal. If this thing just hits at 100%, just keeps on, keeping on, keeps going, $25 is not going to make a big difference in the general scheme of things. I know. $25 worth of Bitcoin will be worth about 25 billion today, but I digress. It's probably not going to happen with these generic shitcoins. Anyway, so I thought it'd be really fun, and I know you want to party with me, if I put in another limit order at a double from the double, okay? And to my surprise, that got hit. So let's take a look at that. So it again, $457. That's probably all I had left in my account at the time, because I had 10 positions on or whatever it was. And then I took off 20% of the IPT, so that's that there. And then I put in a limit order for $25. And when that gets hit, I immediately buy $25 worth of Bitcoin, okay? Now, again, this is not necessarily good practice to dollar cost average into Bitcoin, but I kind of pretend like I'm paying commissions on these shitcoins, and I'm putting that over into Bitcoin, and that's my mining, so to speak, because it's not feasible for me to actually mine Bitcoins. It's probably not feasible for most people unless you have really, really deep pockets, and I think the halvening makes it even harder. So that's a 300% run, and then at the 200%, I took off another, like I said, $25, a little limit order up here, and the mark to market was 628. So 457 invested, took out 273, took out 25, took out another 25. So that's $50 that goes to Bitcoin on this thing, okay? And to my surprise, that's added up, and it's become several $1,000s, and we're going to see where that goes. And boy, if I could mine one whole Bitcoin and just sit on it and see what happens, that would be a lot of fun. I know you want to party with me now, right? Anyway, 628 mark to market, we had all that up. That's $494. And look, we only put in 457, so that's 108% return. Now, it's very tempting to step on the gas, but I'm not going to do it. And let me tell you something too. It's much easier to trade a smaller account. Once the numbers start getting bigger and bigger and bigger, again, like I said a minute ago, psychologically, it gets a little bit tougher. So I thought I would have fun with this. And if I run it up into something significant, I'll say, you know what? I got to remember this was just a small account, and then keep treating it like an ATM and keep pilfering off a little bit, or whatever the word is, skimming off a little bit when these things just go absolutely crazy, because many times they'll spike up and come right back in. But if I could get a little piece off and stick it into Bitcoin and see what happens. So, and let me know. Is that a crazy thing? I don't know. Now, this morning, Hal was asking, given the recent current crypto correction, are you looking mainly for PB setups, that's pullbacks, or watching for breakouts? And my answer to that was yes. And then I waited a few minutes and started giving him some examples of recent trades. So here was a breakout that I took, I think it was yesterday. And this is one thing that's a little frustrating with the crypto sometimes. Notice that it shot up and it came really close to that IPT. Now, if I'm watching the screen and it gets really close, most of the time I'll take it. But you got to have a life. You can't sit around and watch a screen all day and all night. So it is what it is. And I stopped out of this one for a small loss. I think I lost about, $30 on the trade. Now, here's the case where I played the pullback. And you can see it's kind of closing in on that IPT. But Dave, you said you would take profits if it got closer and you watched it. Well, it needs to get a little bit closer, but it's getting there. So we'll see. And maybe during this presentation, it'll hit. But you can see we've had a nice thrust higher, and this was a pullback, and it began to rally back up, and that's where I got in. Sometimes I'll get a little aggressive if I see them moving where, like the core methodology, for instance, let's say the bar's here, I might get up way up here to give it some wiggle room in case it goes up, it comes in. But crypto, because when it moves so fast, a lot of times I'll kind of anticipate that move and get in a little closer. You can do these things and get a little more aggressive with your entries. And also you can kind of micromanage them a little bit if there's 10 other pairs you want to be in and the one you're in is not doing so well. Just like that one I just showed you, I decided to scratch that one out, build a little cash, and wait for the next one to come along. Now, once I hit the IPT, by the way, I try to hang on as long as I can with a liberal trailing stop. Anyway, so you can do it. Every time I try to do, what's his name? Bella Caroli. It sounds like the Water Boy, the guy from the Water Boy. What's his name? Rob Schneider. You can do it. All right, let's talk about the mystery charts and the methodology in action. So this week is mostly mystery charts. You can see this one here. This is a setup going into tomorrow. I had it on for today. And you can see it faked out. It came pretty close to triggering, which I'll put the entry in just 1 second, but before coming back in. This is why you want to wait for an entry. But notice the Landry light, which was lows greater than the moving average. And down here, you can see the count was about 50. That's a pretty solid trend. Also notice it was beginning to accelerate higher and then pull back. Now, later on in the presentation, I'm going to talk about keeping things simple. And it doesn't get much more simpler than this. In fact, if you took out the moving average and the Landry light illustrator, it would still be a setup, okay? So there's the parameters. I was looking for those, 420, 320, 520. So just above that high is where the entry is now. That was fairly liberal based on yesterday's high. Now on today's high, since the stock is lower, I'm going to leave the entry at the same price. And there's your stop. And then if you broadcast it up, it's actually a little bit off the chart, but that little green, if you squint your eyes, you can see up here, that would be your IPT on that one. So here's another one. And if you want to see these live, you can go to davelandry.com/trading service. There is a cost for that, obviously. But if you want to look at the archives, and tomorrow when I get this video updated, I'll update the archives so you have everything to probably mid to late last week to look at them. It's a great exercise, if I say so myself. If you don't have a lot of money to trade and a lot of money to invest in yourself and education and a service like this, which I'm a big fan of spending money on education and service. It was funny when we were moving, every time a new book would come in the mail, my wife was like, really, another book? It's like, well, you never know. You might get one little idea out of it and make it worthwhile. So I'm a big fan of education. My father instilled that into me, and it was one of a great traits. Don't skip on spending money on yourself when it comes to educating yourself, or someone who can help you educate yourself. Anyway, but the archives are absolutely free, and each day when I look at a setup and setups that I like, I try to show why I like them, or I do show why I'm like them and why I might like one over the other, some of the problems with some of the ones that I didn't take, and so on and so forth. And it's more valuable, obviously, to get that live. That's the best time to get it. And the second best time to get it would be delayed. So you can check out the delayed ones at davelandry.com/archives. Anyway, you can see nice little trend here. And if you go way back in time, we had Landry light on this one forever. Nice little fairly deep pullback. There's your parameters down here, 48, 38, and 58. This is going into tomorrow. So let's take a look at where that entry would be. Fairly liberal entry in this particular case. Now, again, in something like a shitcoin, I would be getting in a little bit closer. I'd probably get in like 45, okay? But here, just in case this thing decides to rally, comes back in. And by the way, it's one of my favorite patterns is when they have a big fake out higher and I don't trigger in, they come back in. Then it's kind of like, aha, okay, we had a fake out. We may have shaken some people out. The next move might be the real move. There's a stop and then initial profit target, broadcast that higher. By the way, all you need is the entry and the stop. That's all you have to figure out. And the rest is the mathematical calculation for that initial profit target. And I do have a spreadsheet, www.davelandry.com/members resources. And I think that's all one word. In post or tomorrow, I'll put a link in. All right, if you like this video, then like this video. If you don't like this video, then go have no fun somewhere else. I doubt that you made it this far, though. And subscribe. Please subscribe. It's very important for me to be able to provide more and more free content, and your subscribing helps me to do that. All right, let's talk about becoming a trend following moron, and I'll give you the kind of thumbnail Reader's Digest version. There was a famous trader, let's call him Trader Joe, and he told me in some emails, he started emailing me, he said that he's never seen anyone with such an uncanny ability to predict the markets. Now, in all fairness, it was 1999, I was just following, and this gentleman was more of a commodity trader, and he wasn't a stock trader, and all of a sudden he sees a stock trader out there that's like showing stocks. And the next day, there was one, at least I remember, I always talk about it because I forgot to take it. I was so pissed off. That went up 56 points the next day. So he was just amazed. And he thought I was the greatest thing since sliced bread. And reality was I was just following along. But I had the wherewithal to actually follow along because the market was going up. So our emails turned to these really long phone calls. And that was back when I had landlines and long distance was still expensive. I remember spending hundreds of dollars on phone calls. It was crazy. And then we ended up meeting in New York, and we stayed in this restaurant for many, many hours into the wee hours of the morning. And it was really a pinch me type of moment. And he's if you've been around for a while in the trading world, you should know who he is. If I mention his name, which I'm not, because I don't want to get in trouble. But anyway, at one point in time, I think he went to the bathroom. The significant other leaned over and says, you know, he's not like this with everyone. In fact, she's never seen him like that. And he's truly impressed with you. And I'm like, wow, it was a very pinch me type of moment. And then when he got back, he talked about several $1 million of seed money. He wanted to do something with me and start a hedge fund or whatever. And I was pretty excited about that, especially because it was 30 years ago or 20 something years ago, 25 years ago at least. And I was still, a young guy in the trading world. And it was pretty exciting to be able to just kind of walk in early in my career and then all of a sudden have a hedge fund handed to me. I was helping to run a hedge fund at the time, but I was just doing technical analysis on the bond market at that time. And I wasn't like running a hedge fund or whatever. But anyway, and in subsequent email exchanges after we met in New York, he mentioned that he was heavily long a market and heavily short a market. This should say short right here. And the market was still going up. And so I thought I was being kind of cute. And I'd send him emails with big blue arrows pointing the market going up, and though he was short. And I thought it'd be kind of funny or whatever, but evidently it irked him. And I continued so I quit doing that, but I continued to draw my big blue arrows in the column. And by the way, the to those of you who don't know me, way back, way back in the trading markets days, we were one of the first two websites out there. I'm dating myself here. It was Trading Markets and Market Watch, and there might have been a third, Street.com. I remember Market Watch went public, and they were worth $1 billion. No, I forget how many billion they were worth, but based on our calculations, our little website should have been worth about 100 million, which I did have some options in it, which would have been pretty nice. I think I had 100,000 options. I still have them. I use them to wallpaper my bathroom. I'm half kidding. Anyway, they're worthless. But anyway, way back in the day, the Blue Arrow. That's what I was going with that. I had a paint program that defaulted to blue, and so I just drew these big blue arrows in the chart. So I became known as the guy who drew the big blue arrows. And Trader Joe told me where to stick those arrows. And now the emails from Trader Joe ceased, but immediately I began to get some emails that were could best be described as nasty grams. And the last one of the exchange was, "You're nothing but a trend following moron and will die penniless." Can't even say it. Maybe I'll die without grammar too. So this was an anonymous email, but I'm 99% sure it was him. And so I called him by name and said, "Look, I'm not trying to be a smartass here or anything. I just call it like I see him. These markets are going up, and I'm still going to draw my arrows because I guess I'm nothing but a trend following moron." And that immediately stopped the email. So that told me that it was him. Now, I was devastated, and I would say borderline depressed or somewhat depressed about this for quite some time. And I remember this whole thing was such a pinch me moment. I remember when we lived out in the country, and like when the first email came in and my wife starts coming down the driveway, which was a tenth of a mile long, I'm like running out to meet her. She's like, "What's wrong? What's wrong?" It's like, "He knows who I am," and blah, blah, blah. And this is somebody I was just idolized. And, don't meet your mentors, is what I would tell you. Turns out he was a dick. Anyway, so I was devastated and I was depressed for quite a while. And I kind of replayed that in my head, and I let that kind of eat away at me. And now I've learned if somebody gives me some shit, especially from this particular thing, spin that into gold, and that's what I did. But at the time, I was pretty low because I was just deflated. It's like he had built me up for all this greatness, and I was going to run this hedge fund, and all this great things could happen. And then all of a sudden, he turned nasty on me because he was shorting a market that was going up, and I was drawing big blue arrows, pointing out to everybody that this market is still going up. But anyway, I really began to question myself, and it was I don't want to go too deep and say it was that dark. I mean, because I had other stuff going on that was good in my life. Family was good, and trading markets was good, and trading in general was good. But I was pretty low based on this, truth be told. And I began to question myself: am I just a trend following moron, and will that cause me to die penniless? And with that in the back of my mind, I began noticing that I lost money when I tried to outsmart a market. Like I get in the market and be up a few points or whatever the case may be, and I take the money off, or I try to anticipate a signal. And I noticed that I lost money when I did that. Anytime I tried to outsmart a market, I'd miss a huge move that would come afterwards. And anyway, but when I just followed along like a good little trend following moron, I tended to do okay. And then I began to think, well, maybe I am a trend following moron. And I began to identify as a trend following moron. This friend of mine's wife buys me a crazy t-shirt every year. And this one, I guess, is not politically correct. I can't really describe it. But one that she was supposed to buy me last year was, I identify as a conspiracy theorist. My pronouns are, I told you so. Maybe I'd wear that shirt. I don't know. Anyway, I began publicly identified as a TFM, and then t-shirts and buttons would soon follow. I should have dug some out before the presentation. Anyway, to my surprise, a lot of my clients began to identify as fellow TFMs. I get emails quite often that's a fellow TFM here when somebody introduces themselves, and it just makes me proud that people would also identify as TFMs. Now, what does it mean to be a trend following moron? Well, you don't confuse the issue with facts, especially the situation in Nigeria. And that was, to those who don't know, I know it's kind of like Dave's greatest hits tonight, but I was speaking at Traders Expo many years ago, and I was showing a bunch of oil stocks, energy stocks, and I was explaining that I was bearish on them, and I showed some live setups, and I showed some setups for my portfolio or whatever, or from the trading service or both. I forget exactly, but I was bearish, and I had live setups in my slides that I put in the day before. And out of the blue, this person just blurted out, it sounded like Henry Kissinger. What about the situation in Nigeria? I'm like, what about the situation in Nigeria? And I was just being rhetorical, and if that's a word. And he began to explain to me the situation in Nigeria, and I'm like, oh, okay. You know, and I was like, I really didn't want to know because I ignore all news. Let me get some water. Now, I ignore all news. This is from Trading Full Circle. And I often say this, but I get questions about earnings. What do you about earnings? I ignore all news. Okay. Do I occasionally get burnt? Yeah, but a lot of times, especially on these positions that I'm in for months and even years, there were a lot of times where I'll make a lot of money when the news is favorable or seen as favorable. Now, this is a little dated slide, and I probably should do an updated one. But these were some of the things that happened, and I borrowed this idea from Greg Morris and Trading with the Trend, which is a great book, by the way. I suggest you get it. He showed a chart, and he put a bunch of news events in it, and the exercise is to go into the chart and figure out where these events occurred. And you can't really tell where they occurred. You know, maybe in the slide back here, some of these really bad things happened, okay? And then, but then look what the market did. It came right back. So why did it come right back? So longer term news is noise. And then you could see after that, going into the next year, all these different things happened. A gorilla got killed, a gorilla got shot, Pokemon came and Pokemon went, and there was a coup in Turkey, Zika virus, Brexit, and North Korea launched a rocket into space. There was someone who had problems with their private email servers and should not have had private email servers, and so on and so forth. Sounds like the chapter in Livermore's Reminiscence when he worked for a big trader and it turned out he was against him and trying to tie his trading up in knots. Yeah, a lot of good stories from that. As you know, Keith, I did a whole series on that. That's one of you know me. I start a series and it takes forever to finish it. But yeah, there's a lot of great stories in Reminiscence of a Stock Operator. Now, what is do not try to add rhyme or reason. The moment you try to connect the dots is the moment you're dead. As I often say, and this is going to get a lot of this stuff is going to get fleshed out over time. But as I often say, the themes, for instance, make a lot of sense, okay? But trying to trade purely off of themes without the chart doesn't work. And a lot of times your technical analysis, or all of the time, technical analysis will find themes. Like when Academy Sports came up as a setup during the pandemic, I didn't connect the dots there, but people were sick of staying home and they wanted to buy some sporting equipment and get outside. Now that's a theme, but I found the stock before the theme was revealed, okay? So I would say if I had to bet, 99 out of 100 themes, as I've said before, do not work. Now, the TFM knows that the only way to make money is to capture a trend. So the only way to profit from any trade is to capture a trend. I don't care what methodology you're using, counter trend or wave counting or Fibonacci. You better catch a trend, otherwise you're not going to make any money. So from A to B is a trend. If you buy at A and sell at B, you caught a trend. Your profit obviously is B minus A. Now, complex formulas and arcane methods may eventually work, but when they do, something far more simpler would also have worked. And as I've said a million times, I've been in a lot of presentations where people will have 100 buy and sell signals on a chart, and you just look at something simple like Landry light, and it doesn't have to be my indicator, it could be anybody's indicator, whatever, or just a big blue arrow, would have kept you in that entire trend and not getting in and out 100 different times. Anyway, you can see this is one we're long now, just a simple first pullback in an IPO, one of my favorite patterns. This stock came public, sold off a little bit, not too much excitement. Then it began to take off. Now, because it's over $30 a share, I didn't do a buy at B because that's the buy at B rule. We tend to like the buy at B for stocks that are a little bit lower priced. Anyway, you can see the entry was there. It didn't do a whole lot at first, but then it eventually took off. And it went a long ways. And that's just a really simple pattern. No indicators or anything were used when I picked that pattern out. Now, Landry light pullbacks, this is STXS, which triggered recently. Notice the Landry light was about 30 or so, 30 bars of Landry light, and then it pulls back to the moving average. The Landry light goes to 0. And as I preach, an indicator doesn't indicate anything, it simply illustrates. Hey, baby. So you always want to look at the chart and see if see if the chart confirms. All righty then. I got to stop eating salty things before I get started. So anyway, the entry was there, and so far so good. Knock on wood. We haven't hit the IPT yet, but hopefully we will. Now, as far as trying to outsmart the market, you follow along and you accept it. You don't try to get cute and get in and out. And I thought about this one last minute because in my YouTube for Your Daily 5, which is on my website, davelandry.com, if you go there, today's April 4th, if you go there, you can see it. And you can see the comments in the YouTube. And somebody said, well, he follows this guru guy. And not to take anything away from this guy, because I don't know his system. Allegedly, he's a pretty famous guy and he's done really well for himself. But this particular gentleman says he gets out to market when there's consolidations. Well, I guess he was right today. But if you try to get out and be cute every time there's a consolidation, or as I often say, dead money, and this is one of the things I told this gentleman because he was out of the market, it's like, well, if you got out every time, it's like, when do you get back in when it takes off again? And here's this position we were just talking about, the KNF. And many times there were dead money, and this thing's almost up 100% now. So you have to sometimes just follow along like a trend following moron. For the CFM 10% system on the SPX, how did the 5% and 10% come into play? You mean today? When we get to the live charts, we'll take a look at that, okay? Thank you, Bruce, for the update. Appreciate it. All right, let's speak of the live charts. Let's pop into crypto, and then we'll shift gears and get into stocks. So let me go and get this shared up. Oh, here we go. Okay, so this is the ERN. Didn't quite make it to the IPT. I want a little bit more before cashing out early. Maybe I'll regret that. I don't know. JTO we just talked about. You can see this one came really close. That looks close enough for government work before coming back in. And then JUP, I have this one in here for some reason. Okay, this was one I was trying to play a breakout on. It shot higher, but it came back in, and I stopped out. So there's two. I don't want to make it sound like they always work, but the losses are fairly small because usually there's enough of these things moving to where you can get out fairly quickly. And now a lot of times I find myself just back in cash waiting. So when the market's moving, and now might be one of those times, you just come in here and look at the strongest ones. And there's a few caveats, like you take a look at, like I just kind of went by this one. Normally, if they have these super long tails and lots of them, that's an indication of a market that is very thin and should be avoided. Let me mix a little drink here. So that's why I didn't get too excited about that one. But let's see if we can find you something here. Or find me something while we're at it. And nothing's, see, a lot of tails everywhere, and some of those are below the 50. Now, I did exit this one early, by the way, when crypto began to correct. I guess in hindsight, obviously, I should have stayed with it. But see this breakout here? This is Bitcoin Cash. And I'm not confusing the issue with facts, but I figured that a lot of people would buy it thinking it's Bitcoin. And that was my only reason. My reason was technically it went up, okay? It was going up at least. And I did hit the IPT, and it came back in. I stopped out somewhere in here. And one reason I stopped out too was some other pairs were moving, and I felt like that Bitcoin Cash would not do quite as well as some of these lesser known coins. So again, sometimes you can just look at the strongest ones, and tonight doesn't look like anything's really popping up and doing that. Is there any individual pairs you want me to take a look at? I'm long this one. That's an ERN. That's a you could do it one. And I'll show you what I'm long. I think I covered most of what I was long, but let me show you what I'm long. Everything that's green is a free roll. Everything that's red, I'm in, and it hasn't hit the IPT yet. So GFI, you can see so far so good. ANKR hit the IPT, came back in a little. FET, this is the one that went up 200%. I was in way back here. I'll stop out probably somewhere below this 30 EMA. Give it a little wiggle room before below. Arrow, that's the one that went up 200%. So 200% move here. It's pulled back a little bit, but so far so good. And then here's another one, and this one I've been in since way back in about a month or so. All right, let's take a look at Bitcoin itself. Bitcoin itself is kind of sideways and consolidating. Always draw your sideways arrows or whatever when you're looking at a market. You can see kind of sideways, and like I tweeted out not too long ago, it looks like a head and shoulders top. Although I hope it doesn't work. That would be a hound of the Baskervilles. I forget who called it that. I think it was Thorpe. I do remember many, many, many years ago, it was like coffee had this beautiful head and shoulders top, and then it went straight up. So when a bearish pattern doesn't work, Charlie Kirk and I guess others call that a bear trap, where it looks like it's going to make this beautiful head and shoulders, and it goes up, sells off a little bit, and then goes straight back up. So a failed bearish pattern is bullish, and that's what I know I said hope, but that's what I'm hoping for. All right, any crypto you guys want to look at? Let me check in with my brethren on YouTube. I mean, how were the 5% and 10% numbers picked up when building that system? Okay, so the question is, if you look at the TFM 10% system, I have these zones in the chart, and if you go to davelandry.com and you click on your daily 5, you'll get more details than you ever want to know, okay, about the TFM 10% system. But let's just go just real quick. Let's go to ACP, and I'll walk you through that real quick. And SPYs are fine. It's the system is based on a cash market, but SPY's fine for now. So if I do my templates, and I created these a little while ago. They're pretty easy to create. I think I could share this with you if you like. Remind me, and I can stick it in the YouTube comments, but here are the zones. And remember, this is a weekly chart. So his question is, how did I come up with 10%? Well, I figured that if a market dropped 10% from its 50-week closing high, okay, then it could be in trouble. So you can see back here, I don't know what year that is. Let me just move this up a little. Okay, that was 2008. Everybody remember that, right? So once it drops below 10%, it tends to get worse. In fact, if you go all the way back to the crash of 87, that 10% number happened. We won't do it on this chart. That 10% number happened the Friday before the market crashed. So you really would have had to been paying attention. Now take a look at the bull market, bear market back in 2000. Okay, what happens? Okay, closes 10% below the 50-week closing high, and then things begin to worsen. Bad news in markets, bad news price-wise, not bad news, but bad news performance-wise tends to beget more bad performance. So if a market begins to sell off, it tends to continue to sell off. And somebody on Twitter pointed out that long after, about 5 years, was about 6 months ago, but it was about 5 years after I published this. I forget exactly when. If anybody knows when they first saw me mention this, please let me know, because I don't remember when. You know, I discover something and I'm like, oh, I'm never gonna tell anybody about this. And then the next day I'm like, hey guys, look at this. So whenever I discovered it, the next day I probably showed everybody. But anyway, 10% I figured is a good round number. Now, Jeff, is Jeff here tonight? Jeff pointed out that when a market gets 5% or more away, it tends to be in trouble. So if we take a look at that, and maybe we need more than maybe we need 5 years. Let's see. Okay. So Jeff was saying that, see this green is 5%. So you can see like right here, it's 5% or more away from the 50-week closing high. Jeff tends to get out of the way. And you can see like right here, if you got out the way, yeah, it bounced back up a little bit, but look how far it sold off. The pandemic, yeah, I guess on a daily basis, it would have dropped to 5% before it dropped to 10. But, you know, as an example, look at the pandemic. When the market started taking the pandemic seriously, notice that once it got below 10%, it kept dropping. Now, what I was started to say a minute ago is somebody at Twitter pointed out that there's a 60% chance, and I went back 100 years, and it pretty much holds true, like 58% or 57.5%. But there's round numbers. There's a 60% chance that if a market loses 10% of its value, it's going to lose another 10% of its value. And that's why I love the educational business, because I put stuff out there and people help me to make it better, and people help me to understand it better. And, you know, sometimes it can be a little lonely, you know, you're doing this stuff and you wonder if anybody cares or whatever, but putting it out there, a lot of times it comes back even better. But anyway, so that's where the 5% came from Jeff and one of my clients. And then the 10% was my original number. And then inspired by Jeff, I created this little zone chart. I think you just tell it to make an area over here in case you're wondering how to do it. So it just says area. That's all you have to do. And then you put in the different parameters. And I think it's 90, yeah, it's here it is right here, 90, 50, 95, 50, and 150. And that's how I created those zones. Nothing fancy there, but it's a great little, I just love the way it looks. A great little visual, right? And you know, I'm just kind of looking at this as I'm speaking, and I'm learning something here myself. Look at the green, it's huge, okay? And look at it following the top of this green, and look how long that trend was and how fantastic that trend was. So something simple as that, okay, can really help you to stay on the right side of the market. You don't have to make it that complex. And it's funny, it's like there's so many people I know, friends and family, and I'm like, if you would just sit down with me for 10 minutes, I could tell you everything you need to know for your world, not to be a trader, obviously, but for your world, what you need to know and whether or not you should be in or out of a market. And basically, I could just tell them, hey, if it's red, get out. If it's pink, be cautious, okay? A little bit more to it than that, but if all you did was that, you would likely avoid every bear market. You would have avoided every bear market in history, and then you would likely avoid every future bear market, okay? No guarantees. I'll give you money back. I'll give you whatever you paid for the system. I'll give it back because it's a free system. So that was kind of a joke. All right, let's jump to the live charts, and then let me check on my YouTube brethren, see what they're talking about. What they're talking bad about me. Oh, lots of comments tonight. Thank you so much. Are you using, or the question is, are you using any screener for crypto? And the quick answer to that is no, but I do When I do use, I use Trading View, and that's what you just saw. And I sort those pairs by the relative strength. Okay, so that's kind of a screen, so to speak. And in stock charts, ACP, or before I get to ACP, if you just put type is cryptocurrency or exchange is cryptocurrency, I forget which one, but try both of those. It'll give you a list of cryptocurrencies, and you could save that and go look at those in ACP. So that's kind of the only screening I'm doing there. I think some people have done Landry Light and things like that in TradingView. And then I think there's some scans out there for maybe Landry Light pullbacks and stuff like that if you dig around a little bit. But yeah, I don't actually scan. And in stocks, what I do is I use a very loose parameter scan, and I'm just looking for recent highs or lows, okay? Based on the eight, okay, so the question is based on the ATR, ADR of the index? No. But yeah, the question is like based on the volatility index, yeah. And that's why I got into the Q trade, because I looked at it briefly, and it looked like it tested out as well as the P's tested out. So I went ahead and bought 100 Qs just for S&Gs at 319.49. I didn't think it was going to run up 100 points, and I'd have to deal with $40,000 in margin on a position. And it's a good problem to have. It's $12,000 in change, or probably a little bit less than that after today, but it's a good problem to have. So yeah, I wouldn't rush out, and I wouldn't even try to adapt that system to something like Bitcoin because it's so volatile. Your parameters would have to be huge. Now, as Bitcoin matures, it becomes a little more efficient. Then something more round number like 10% or 15% or 20% might work out there. So yeah, I should have read the entire question. You kind of answered the question, your own question. I'm trying to build my own version of it in TradingView. I could use other stocks as well. I'm thinking of using something like 3 times ATR or something like that. Yeah, that might work. Don't reinvent the wheel when it comes to stock trading or trading in general. But yeah, it's okay to noodle with some things, and I'm flattered that you're doing that. So I don't want to stop you from doing that. For stocks, I prefer just looking at it as generic pullbacks, the Landry Light pullbacks, and things like that. I wanted a simple little system. And keep in mind, this is not a system to get you into markets so much as to get you out of markets. As I preach, market timing is less about beating the market, okay, and more about not letting the market beat you. Ian McActivey, he was kind of my canary in the coal mine. He drank a little. I wouldn't say he was a heavy drinker, but he drank a little. He smoked and all. It's like, okay, so he's my canary in the coal mine. How long can you behave like that and stay out of trouble? And eventually caught up to him. I was like, oh, I better check my lifestyle here. But Ian was wonderful. I'm sure he doesn't mind me making fun of him. He was a wonderful individual, and he gave presentations that were, unlike me, were funny as F, and just the funniest guy. Great guy, but he would use the term, he was given a presentation once, and he starts talking about these potential economic disasters, and he says that's when the diaper change moment occurs, and we were on the floor laughing. He's just such a trip coming from me, and it's much funnier than me. But the whole system was kind of inspired. The reason I had like the diaper change, if you look at the spreadsheet, which you'll see in that aforementioned video on my website, davelandry.com, it's on the homepage right now. And then in the future, you can find it on Stock Charts video page on YouTube. And you'll find similar videos. YouTube at Dave Landry is my handle there. But the systems, the designer's intent, and always make sure you know that when you're looking at a system, what's the designer's intent? And the designer's intent was to get you out of the market when it gets in trouble, but not have too much zig and zag and in and out, in and out, in and out, in and out. I mean, there's other systems do that, right? Something that could be a little bit more longer term trend following, although I was shocked how it triggered like that during a pandemic, actually quicker than something like a bow tie, which was not a daily bow tie, but a weekly bow tie and other things. In fact, some daily signals didn't trigger as fast as this weekly system did. So, but always know the designer's intent. Basically, this isn't something to get you into markets. This is something to get you out of markets. Although I did take the last buy signal for S&Gs. All right, S&P 500. I almost put out a post earlier today, but I don't want to get too much into the minutia. But today, after the hook was sort of in, after we tried to rally up and came back in a little bit, it just felt ugly. And these route days, I'm not an advocate of day trading. In fact, a lot of people are shocked that I actually day trade now because I was so against it. Your brain isn't made to wire to do that many decisions, and you could burn out really fast. And I have to be careful of that. I know. But if I can just sit around and wait for the hook to be set, so to speak, on a day like today, we have that big opening gap reversal, and then it begins to implode, and then it becomes like an outside day down. Those are the absolute best days to trade. So intraday, it looked like the end of the world. I wouldn't get too excited just yet, okay? We're just barely or even touching it. 30 EMA, your best friend, once again, 51.45.37, and the P's closed at 51.47.20. So we don't even have a downside Landry like just yet. You have to really squint your eyes. But this low is a smidge above the moving average. So we barely pull back to the moving average. I wouldn't get too excited just yet. Okay, take a look at the weekly. You can see it's barely even where it was a couple of weeks ago. Okay, so no big whoop just yet. But pay attention. Okay, that's what trend following is all about. If anything, I would say for now, this is bullish with a caveat. You'd have to wait for an entry. So if we take out 52, let's just say 52.50 round numbers, it could be off to the races. And if that doesn't happen, just avoid the market. Harder for me to get back in, scale in, how much, etc., than out of a market. Getting out is easy. Getting out is easy. I'm not sure exactly what you're saying, but that sort of reminds me, I'm going to answer a different question or talk about a different thought. That's the other thing that this gentleman in YouTube, and I appreciate his comment, but he says that like this guru he follows, he gets out of the market when it begins to consolidate it, and I guess he was feeling pretty good about being out today. But the problem is, how do you get back in? Okay, and what happens? Like it doesn't happen often, but we had one years ago that went up a little bit, and then it flatlined, and we'd up a little down, a little up, a little down for months, and then it got bought out. And I know a lot of clients got bored with it and got out of it right before the market took off. Anyway, back to the P's. I think they're okay for now. Check back often. Nasdaq Composite, I think it's okay too. It's down below 30 EMA. Let's not get too excited just yet. Okay. Notice that if you draw a horizontal line from where we are today going back in time, now this is a tiny bit scary, okay? You can go all the way back to mid-February. So we've got about 2 months on a net basis. And that's one of the most powerful indicators there is. Like earlier I talked about, you don't need all this crazy indicators and wave counting and Fibonacci and all this other stuff. Just look at the charts and where are we now, where are we then, the net price movement. Very, 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 very important. So that is a little bit of a concern. I'm not gonna sell the farm. I might have it appraised, but I wouldn't get too excited about that just yet. In fact, this market could use a little correction to shake some people out. The only thing that scares me a little bit, and I know this might be confusing the issue with facts, was the Barron's cover with the bull horns. And I forget, I have to look at my tweets because I tweeted that out as did a lot of other people. It wasn't an original thought. But there's an old stock market adage about magazine covers, and when they start putting bulls on the covers, it's the end of the run, and when they start putting bears on the cover, it's the end of the bear market. So hopefully that's not a harbinger. But hey, here's the beauty about being a trend following moron. All I have to do is follow along. And the other thing too, by the way, here's one more other thing that I want to work into future presentations. That K&F, for instance, was way back last July, and we're still in it. And the markets had a lot of zigs and zags and consolidations in between. The stock itself did, as you just saw, and the overall market did. So had we have gotten out of it doing those consolidations, when will you get back in? And there's what's the old adage? Bull markets never let you in, and bear markets never let you out. It just seems like you're like, okay, I'm going to buy, but if I'm waiting on that correction, the market just keeps going up and up and up and up and up. Anyway, we just looked at Bitcoin, gold, the commodity. These radio idiots are finally right. Okay, they're always telling you to buy gold. Well, these guys, if you're like me, I can't afford to lose 30% of my assets. Well, guess what? You can lose half your money or more in gold, or half your money or more in Bitcoin, or half your money or more in stocks. So all asset classes will lose at some point in your lifetime at least half of their value. But these guys telling you need to buy gold because it's going up. Well, they finally got it right, but why would they be selling it to you now? If they're right, they should be holding on to it, right? So whatever. It just kind of irks me when these guys are doing these things. Biotech's a little questionable in here. This is one area, at least basis the IBB. We'll have to look at some other indices here, but this one does look like it's a little bit of trouble. As I was telling one of those stocks I recommended was a biotech. And as I was telling my people in service tonight, biotech's a little tricky because sometimes the sector can falter, but the individual stocks can still take off. So ideally, you want 3 out of 3, the stock, the sector, and the market all head in the right direction. Sometimes 2 out of 3 ain't bad. And sometimes if you really like the setup, just 1 out of 1 isn't bad. Here's KIE. This is insurance. Just pulling back a little bit. So far, it looks pretty good. Just a little bit of a correction. And let's take a look at some of these ETFs in here. Let's get a little further down. Drugs, another one of those kind of questionable areas. So let's put drugs and biotech in the questionable column. Beginning to sell off a little bit. I wonder if I have bow ties in here. Let's see if I have bow ties. Yeah, it looks like it's trying to bow tie. It took out the 50 simple, okay? So this is one area that's beginning to concern me. So let's hope, I know you just said hope, but let's hope that it doesn't worsen any, okay? Let's get back to the major MIGs. What else? Oh, marijuana, 420 stocks. You can see they've been doing really well as of late. They're kind of going straight up today, notwithstanding big 180 correction here. But we could see some setups here fairly soon. So don't chase the theme. Let the theme come to you. I just paid for your webinar. Okay, write that down. Gold stocks are finally beginning to wake up in here, as you can see, just off of these multi-year highs. So that's a good thing, or 1 year plus highs. A lot of the gold stocks have a lot of overhead supply to deal with. So that's one of my concerns there. So gold itself, the commodity, looks a lot better than gold itself, the stocks, or the gold stocks, I should say. All right, semiconductors. Semiconductors, as you can see, have pulled back in here. And let me, that's not the one I want to get rid of. But anyway, we'll just get rid of all of these. So I wouldn't get too excited just yet about semis. In fact, semis actually still look okay. They're still technically kind of rallying out of this pullback, albeit not by much now. But yeah, they lost a little steam. So the bottom line is, if you like a setup, take it, but make sure you wait for entry. Silver looks pretty good too today, notwithstanding, but you can see we're right off of these multi-year highs, so that looks pretty good. Metals and mining stocks are kind of wide loose and all over the place, but they are beginning to kick it into gear a little bit. You can see they're just off of these multi-year highs. At all-time highs? No, not quite all-time highs. Home builders have been doing really well, but they pulled back like everything else a little today, but still looking pretty darn good. Draw your arrows in all these areas. Telecom just off of all-time highs, outside day down, a little ugly today, but so far it's okay. Now, the other thing about being a trend following moron is I'm not going to predict the top of this market this early. Now, there's a lot of people out there to predict early and often so they can say, I told you so. I know some idiots who were predicting the top of Bitcoin at 4,000. They said it was the stupidest thing in Stupid Town. Well, where are they now that it's 70,000? They're still saying the same thing. You know, one of these days they're going to be right. These idiots, you know, what kills me is they're like, it's all crap, it's all made up. Yeah, sure. So what? You know, it's going up. You trade traders, not markets. But as soon as these markets have a little bit of correction, it's like, I told you so. It's like, well, you told me so back at 4,000. And you know, that's the other thing that I need to work into the presentation, future presentations, is I remember thinking, like, I must be the stupid guy in Stupid Town paying $18,000 a Bitcoin. What the hell am I thinking? That's just ludicrous. Even ludicrous would say it's ludicrous. Well, now it's 70 or 60 now, I guess. So as you can see, most of these areas still looking pretty good in here. Nothing to get too excited about just yet. But as usual, check back off, and that's what trend following is all about. All right, individual stocks and questions, SCCO. Oh, by the way, thanks for all the interaction tonight. So it's not just me talking to myself. This is this a actual metal itself? Southern Copper, or this is a copper stock. Yeah, this looks pretty good. So, for metals and mining stock, it's trending nicely, Keith. So that looks pretty good. So yeah, put that on your watch list. I'll add this to my momentum list now that I've seen this in here, and I would have seen it on the first little pullback. So based on my scans. All right. So yeah, I like that. Definitely keep that in your list. Before we went live, I was talking with John about IPOs. John Ross is in our Facebook group. He's our resident expert. He took my IPO course years ago, and he's taken that ball and ran with it or run with it. I always get those confused. I'm sure somebody will correct me. Anyway, I actually asked him about what do you see in IPOs? What do you like? And he's done so well with them. So congratulations to John. Thank you for being contributed to the group as much as you do. Anyway, he just said he was referring to a lot of IPOs are failing. I was asking another question, and then he answered my original question. So yeah, IPOs are not doing so hot right now. Like what's one like off the top of my head? Reddit, for instance. 5-day rule. Okay, so never attempt to buy an IPO until at least day 5. Okay, day 1, day 2, day 3, day 4, and then this thing imploded. Okay, I'm just shocked at how much trouble that simple little rule will keep you out of when it comes to trading IPOs. Okay, let me check in with my brethren over on YouTube. Boy, active bunch over there. This is the most comments we've ever had. Thank you so much. I really appreciate it. Yeah, okay, good. Yeah, good job. Yeah, don't. So he's saying that he's going to explore with different volatility options so it adapts to the current ticker. Yeah, absolutely. The only thing you're going to find with this generic trend following stuff is that your parameters, because you're looking at longer term methods, your parameters are going to be so extreme that it might not be worthwhile. Whereas if you look at like those mystery charts I just showed you, and those would be great examples since they're live, notice where I put the stop and notice where I put the initial profit target based on that stop and based on the entry. If you were to run some sort of statistics on that, statistics would probably be about 4 or 5 times larger than what I have. But I like the setup. I like the pattern. I'm using discretion and choosing it. And I believe that the pattern is such where you could use those. And a lot of people still think I'm crazy because it's so wide. Might be 30% in some cases. I don't know what it is. And that one stock, it might be 30%. But that's what it calls for. But if you're trying to build a longer term trend following system, your parameters are going to just be crazy wide on that. So that's the only thing I would caution you. S&P 500 tends to work well with it. S&P 500, by the way, is not a really good trending market. And back in the day when I developed literally several thousand systems, I could never make anything work in futures, in the S&P futures. And that's because it's a choppy market. It doesn't trend. But this longer term TFM 10% system does work. And again, the designer's intent there is to help get you out of trouble. That's my weakness. I don't have objective of selling if I finding them. Okay, let me try to read this. That's my weakness. I don't really have an objective way of selling. If I'm using HLs in the daily, I find them usually give up a lot of the gains. Well, I'd refer you back for starters at least to the 30-day EMA. That's going to be your best friend, okay? And that's going to keep you out of trouble. John says, thanks for the kind words and thanks for another great show. Well, thank you, John. I appreciate it. I truly do appreciate you and all the other members in the Facebook group too. All right, looks like the questions have slowed. Any more stock tickers while I'm here? Well, as usual, I want to thank everyone for attending tonight. I appreciate you taking time out of your busy schedule to be here. Please join me next week at davelandry.com/webinar. And I would love to have you. Anything unanswered, you can shoot me an email at david@davelandry.com. If you're looking at this video, or watching this video, I should say, that sounds like the old people. I was looking at TV last night. I'm getting old, so I'll be there soon. But if you're watching this on YouTube, feel free to leave a comment below. I answer all questions and comments that need answering. Okay. or I'll like it if there's nothing to answer. All right, everybody have a great weekend. Everybody on Facebook, I'll see you guys and girls tomorrow. Thank you so much, and may the trend be with you. You're welcome.